Instead of selling your stock and paying either a short-term gain, which is ordinary income tax, higher brackets usually, or long-term gains, capital gains that are lower brackets usually, what you can do is borrow against those. You can borrow against the stocks that you own. So borrowing doesn't cost as much money as selling and paying the taxes on the gain, and you still own it. Hey folks, this is Colin Richards, and I'm once again excited to be talking to you on subjects about becoming financially independent, particularly in your retirement or non-working years. You know, I define financial independence as being able to do what you love with the people that you love, going to the places that you love, and not having to work to pay for it. I think that's a pretty good definition. Now, some of you are going to work the rest of your lives because you love what you do. Maybe you started your own business or your work feels more like a fun hobby. Whatever the case, what we want you to be able to do is to be able to decide for yourself whether work is something you want in your life or whether you want to be what another friend of mine calls job optional, right? Free to go on trips, free to spend time doing what you love. And our clients are all over the map. They're visiting children and grandchildren, heading to Europe or South America, or just taking a staycation in their backyard. And so today we're going to talk about one of the key pieces that is so important in becoming financially independent. You see, financial independence isn't just having good investments, although that's important. You need to develop a written risk management plan to make sure you don't lose those hard-earned assets during market downturns. You need a written healthcare plan to make sure the number one cause of bankruptcy doesn't affect you and your household if someone gets sick. You need to have a written income plan to make sure you never run out of income and that the sources that you take income from are working together seamlessly. And you need a written estate plan so that you know that you'll be taken care of and your family will be taken care of at the end of life. But the final piece is one we've been talking about for a couple of episodes. It's this issue of how do I avoid paying taxes in retirement? Not that I'm trying to be unpatriotic. I grew up in a military home. I love my country. I just don't want to pay any more taxes than I'm supposed to, right? And I think most of my clients, just like you, are telling me the same thing. So over the last couple of episodes, we started with this idea. You're probably, if you don't get a plan in place, going to pay too much taxes in retirement. Taxes are your number one expense in retirement. Healthcare is your number one cause of bankruptcy, but taxes are your number one expense. It's different. And then what we want to talk about is how then do you build a foundation of a tax-free retirement? We discussed that in our last episode, and we talked about making sure you begin to implement vehicles that can grow tax-free, like Roth IRAs, municipal bonds, and life insurance. And whether you hate one or more of those or not, the reality is you need to have these tools in your arsenal. Now for this episode, we're going to talk about how to take money out of your accounts tax-free and to do it wisely. How to take money out of your accounts tax-free and to do it wisely. Someone has called this the buy, borrow, and die strategy. I picked that article up recently in my newsfeed, and I thought, that doesn't seem very pleasant. But here's the general idea. Step number one, you need to buy assets that appreciate. That's obvious, right? But we want assets that will ultimately be able to withdraw money from tax-free, so that limits our pool. I've already talked about Roth IRAs, right? We know we can invest and put money in Roth IRAs and it'll grow tax-free, and if you do it according to the rules, you can get your money out tax-free, okay? And there are rules, so you're going to need help. There's also investment real estate. Most people, if they're going to try to figure out how to get around some of the onerous taxes we pay, whether ordinary income taxes or the improved rates that most of us have access to through capital gains, the problem is if we want to take an asset and sell it that has appreciated, we're going to pay taxes on that growth. It's called capital gains. Is there a better way? Well, during low interest rate environments, so this is something to be putting in your head now and implementing in the future, when rates get under control, and they're going to come down, Right now, it's a great place to save money and get good rates, but it's not such a great place to borrow money. But we want to find investment real estate is an option to withdraw money from and do it in a tax-free way. I'll tell you how to do that here in a minute. You can buy stocks on margin. There's risk associated with this, so we don't want this to be primary. But instead of selling your stock and paying either a short-term gain, which is ordinary income tax, higher brackets usually, or long-term gains, capital gains that are lower brackets usually, what you can do is borrow against those. You can borrow against the stocks that you own. So borrowing doesn't cost as much money as selling and paying the taxes on the gain, and you still own it. And then finally, as I've talked about in another episode, you can buy gradually over time. That's an important one. Life insurance, fitting under the code of the IRS tax code called 7702, Section 7702. But let's just call it what it is. It's life insurance. And whether you hate it or love it, you can design a life insurance policy that is low cost, principal protected, that grows tax-free, and from which you can borrow money out tax-free and interest-free. That's a critical component. Not just tax-free, but interest-free. See, most of the other vehicles say a home equity line of credit, yeah, you're borrowing against your equity, but you're still paying interest against it. But what I like about life insurance is if you build this up over time, so I'm talking to people who have a little bit of time ahead of them, and you do it properly, you can borrow money out tax-free and interest-free against your own asset. And that is a tremendous idea. You see, with investment real estate, you got to wait until rates are low, right? But even then, paying some percentage points of interest is better than paying capital gains. So borrow against real estate and create an income stream from your own real estate. Or use margin. You can borrow up to 30% typically of the value of your stock accounts. But again, that has some risk. Or using the value of a life insurance policy that's been built up over time, you can create what's called a wash loan where you pay no interest, and yet still access that money tax-free, and it settles up on death, or you can settle it up earlier. So these are some tremendous tools. It's only the tip of the iceberg. We're just scratching the surface here of tools, vehicles, and strategies that my team is employing every single day to help people just like you not only retire financially independent, but to pay less taxes while doing it. I don't want you to have to pay taxes at all in retirement. And so start by building up a good foundation in Social Security. Don't withdraw more money than will cause Social Security to be taxed from your taxable accounts, and then set up income streams from tax-free sources so that you pay zero taxes in retirement. That is a great strategy, and we're helping people just like you do it right now. You say, well, what is involved, Colin? Well, it starts with a visit in our offices with our team. We employ a team of specialists, and I would love to help you. I'd love to visit with you myself and learn more about your situation and help you develop a plan for financial independence. We call this process a financial independence review, and it really just starts with a simple conversation that you have with us by picking up the phone.